Hey guys, Steve here from the turtlefollower.com with the weekend update for November 8th, 2014. Hope everyone had a great week. Unfortunately, if you don't follow me on Twitter, you probably haven't heard, but we had a death in the family, and I decided to just take the week off, kind of reevaluate some things, but, spend some time with family and, leave the charts for a week. Sometimes it's good to clear your head. It definitely helped. I'd still followed everything. So if there was anything that was detrimental to the portfolio, I would have obviously put a quick video together. But the fact was, I just let everything work this week. Just goes to show you that you don't need to necessarily follow the market, every minute of every day. Just as long as you check in once a day, take a quick look, make sure everything's proceeding as planned. Then that's a great trading system to have, and that's one that we try and push here at the Turtle Follower. So as far as our positions go, we did not enter any new positions this week. We did not exit any positions this week. We did miss out on, I would say, 3 positions or trades that did trigger that turned out to be nice looking trades, but we'll leave it at that for now. The fact was, we really didn't have much room in the portfolio, or we didn't want to necessarily add those positions anyway. But for those who aren't following along necessarily with the portfolio, it would have been nice to be alerted to them. So I apologize for that. But again, we'll go over those 3 real quick in a little bit. As far as our positions go, you can see here we have 14 positions. All right, we've accumulated a profit of $4,100 so far. Open risk is 11,000, so we'll see if we could take that down a little bit in this week's video. Hopefully raise some stops along the line, but I'll be honest, very difficult just because of where the market has been and how quickly it's ripped higher. So there's very little in the way of intermediate support levels, but we'll take a look and see if we can potentially move those stops higher. And you'll see here right now, if we were to look at our performance, the total value of the portfolio is back over the $100,000 level that we started with. So we're up $749, 0.75% as compared to the S&P, which is up 2.59. Again, as I discussed last week, it's a little skewed. Just realize that, to outperform the market is actually very difficult to do per se, because think about how our process works. As stocks start to go down, we're actually being stopped out, and our invested allocation is getting less and less, and therefore when the market turned around, we weren't necessarily fully invested at the bottom. We may have been about 50%. So this 2.59% assumes that you are fully invested 100% of the time, and you will ride out any move. So, to be pretty much right at it, I feel is good. We mitigated risk when we needed to. Okay, you could see here how our risk, we were able to kind of stop the bleeding a little bit better than the S&P did. And now we're kind of paying the price a little bit for being stopped out. But nonetheless, we're moving in the right direction, back to profit for the year. And the first time that we've seen that since the first week in October. So as far as our positions go, you could see here our best performer right now is Costco, 1.06 PNLR. And again, that just says whatever we risked at the beginning, $719, we've made 1.06 times that. So we've made $758. So 1.06, 1.02, 1.01, which is Costco, L Brands, and Travelers. So some good positions there. Our 2 losers right now are LMT, down $6, 0.01, and CTAS down a half an R, 0.51 R. So for right now, positions look great, allocation looks great. I'm just pretty much letting everything run right now. Again, we did miss out on 3 triggered trades, which looking back, is unfortunate, but in the same respect, it's 3 trades, and it's not going to break us. So let's go over and look at the positions real quick, and then we'll go through the markets, the positions, and the new watch list for this week. All right, hold on a sec. All right, so as far as the markets go, you can see pretty much that we've just continued to rip higher. We've basically gone through every resistance level that we identified like it was not even there. And that's similar to a lot of the setups that we've been seeing the past few weeks. I know last week's watch list was fairly short. This week's watch list again will be fairly short. But the fact is, we found the positions, we found the trades, we traded them, and now we're kind of in wait and see mode. We're just holding. We're not really looking to do too much, and really just trying to monitor and manage the positions that we're in. So S&P 500 futures all-time highs. I'll make this very short actually, because I think actually all of them are at all-time highs. The NQ futures, the NASDAQ futures, you can see consolidating right above all-time highs. All right, so nice little small consolidation to kind of digest those gains, but 50-day moving average, 20-day moving average are still fairly far away. So the longer that these consolidate, the better off it's going to be for the longer term trend. Dow futures up 5 points, and again all-time highs. And the Russell, come on. You can see it's consolidating right below that 1172 level, right? I talked about that being some potential resistance that's showing to be that. So I wouldn't be surprised to see this kind of pull back a little bit, and then maybe move higher with an inverse head and shoulders as we've discussed. So, looking at the markets briefly, there's nothing not to like. The fact is, all of them are at all-time highs except for the Russell. They're consolidating at those highs. They're holding those levels. So there's no resistance ahead. And that's the beauty of being at all-time highs. You have no resistance. Everybody that's ever traded is a winner. So, just let that sink in for a minute. Think about anybody who's ever been long. Obviously futures, you have to roll the contracts and everything like that. But needless to say, anybody that's ever been long the three major indices is a winner. So as far as, what that means for our stocks, that means really there's very little resistance on them as well, just because the trend is higher. All right, the tide is kind of lifting all boats here, and we're just trying to ride the wave. We have the wind at our back, and again, it just helps positions kind of move forward, just because the market is being bought, meaning stocks are being bought. So everything is really shaping up to be quite good right now. We did have a small pullback here on Friday, but after the run we've had, the fact that we were down less than 0.5% on all of those indices and still pretty much above, you could see how the lows have continually gone higher and higher and higher. So we're still doing that same pattern. We had one little potential day that maybe you could classify as a reversal, but again, the biggest thing that I would see now on these markets is you want to see some type of consolidation at some point. All right, we can't run like this forever. So you want to see consolidation versus pullback. All right, if we can consolidate in maybe between 2000 and maybe between 2050, just throwing a number out there, and do that, let this 50-day moving average, let these trend lines catch up, then it sets us up really well for the last few months of the year. But again, markets are exceptional. We kind of did look at maybe shorting some stuff down here, and I'm glad we didn't really look too far into that. Really just tried to get back on the horse and take our positions higher. So with that said, let's take a quick look at our positions, and let's see if we can adjust some stops to take some of that open risk off the table. All right, so Apple, you could see here how well it's moved off that 95 level. We broke out again over 103, and that was our trigger point to get long again. And right now, last week, it's really just been consolidating at the highs. I think after a move like we've had, that's not surprising. Again, similar to the markets, you have to consolidate or at least rest at some point, and those rests set up the next run higher. So with us right now for Apple, we're still using this $95 level as our stop. If you wanted to tighten it, you could probably bring it to 97.56. For me right now, I'd like to just keep it at 95 and just let this thing work. You can see here on the weekly chart, coming into that overbought condition. So that's also providing some type of resistance for us. Looks like dividend will be paid out soon as well. ACE up 0.07. Again, trigger point was here on the 24th. We entered the next day, and you could see we were up about $2 from our entry point. So 101, good stop level for right now. And again, you could see there's very little in the way of intermediate support. The next spot that actually had a pullback and a hold would be this 105 level. I would like to see something a little bit more substantial than a 3-day move sideways. But for right now, 101 is a decent stop. I would like to move it higher at some point, but for right now, I think it does the job. CB, okay, this one was a great one. I actually had some call options on this. That worked out well for me. Also working out well, we're long the stock here. So again, trigger day was here on the 24th, entered the next day, and it's continued to run since. I got in at 96 and we're at 101, so about a $5 gain per share. And you can see though, again, where would you put your next stop level? I mean, it's very difficult. So $90 is a good spot. The only spot I would see would be next would be this 94.20, and that would have to wait for the 50-day moving average to catch up. So for right now, as tough as it is, you got to keep that stop at $90.50. Costco, all right, Costco, we moved up once to this 122.07 from 120, so we took $2 off the table there. And again, you could see this run it's had. Beautiful run, had a little small consolidation here, so we're looking at potentially using that as a next stop level. But for right now, longer term trend is very much intact. Dividends coming up, and it is just consolidating at its highs. So again, just kind of let these things run. You can see here on Costco, we are coming and approaching that second standard deviation move. So if you were long maybe some options or something like that, maybe it's a shorter term trade, maybe you want to just kind of tighten that stop up and get taken out at some point. But for us, perfectly fine with letting it stay on and see what happens. Now Home Depot, again, we entered, I think it was back here on the 8th, and we had a quick pullback almost immediately after, tested, and then we ended up moving higher off of that. So right now what Home Depot is doing is it's actually consolidating. Tried to break out, looks like it was last Friday, and couldn't do it. But you could see here it is basically consolidating between 95.60 and 97.80. Earnings are coming up on the 19th, so let's be aware of that. But for right now, good looking stock, good looking chart here. And again, very little in the way of moving a stop higher, so that's unfortunate. Kroger, okay, Kroger's continued to move. Kroger, we are actually going to be able to move up. All right, so Kroger, we're going to actually take and move to this area here. Let's take this one out and duplicate this. So let's bring our stop in Kroger right to, let's call it 51.50. All right, and we can do that because we have some significant support right in that area, and we're also below the trend line and below the 50-day moving average. So we'll take that stop, we'll move it up about $1.50 in Kroger, and that'll lock us in with some gains there. I'm sorry, it actually won't lock in gains, but it will take some risk off the table. L Brands, again, this one is one that we can potentially move higher to this 65.29. All right, so if we move up to 65.29, it'll take a little bit of risk off the table. And what that will do is take that open risk in the portfolio down a little bit more. Again, the whole idea here is, let the positions work, manage the positions as needed, and go ahead and take some risk off where possible. Let's not try and time where the top is, but instead just let the position tell us when it's given up and the trend is over. So for right now, again, move that stop from 63.36 up to 65.30 in L brands. But again, another one that's pretty much right at its highs. So that's what we like to see here. LMT down 2%. So this was the biggest loser this week. You could see it pretty much topped out and has pulled back since. But again, not much in the way of some support anywhere after the stop level that we currently have. So we're going to keep that as is, 170. I'm expecting this to come back, kind of test this 181. At that point, I think the 50-day moving average will also be around there, and you'll see that trend line support. So that's a big area right there, that 181 area. I'd like to see it pull back and bounce from. Nike, again, this one has just moved higher since entry. 83.75 was our stop level, and that will remain our stop level. You could see not much in the way of intermediate support again, but for right now, it's moving higher, and we are coming into that overbought conditions. So let's just keep an eye on it, but I wouldn't be surprised to see this come back to like the $90 level and maybe even bounce off of that level when the 50-day moving average gets up there. Pepsi was down 0.01% today, and again, you could see $90 was the stop and will remain the stop. Next level we're probably looking at is somewhere right around here. It's 93.82, but we have to see some advancement maybe towards the $100 level and that 50-day moving average to trade higher. Ross Stores down 0.57. This one looks good. All right, earnings coming up on the 20th, but again, looks like it was consolidating this week. Finally broke out yesterday, and today had a little bit of a pullback, but you could see here came right to that 82 level and reversed again. So that's just something we want to watch, that 82 level. But again, for right now, Ross Stores, I would say we could probably move our stop to this 74 level. So let's do that now. Okay. And I wish they made it easier to actually do that. Anyway, 74. So we'll call it 74 here. And that'll be our new stop in Ross Stores. So again, you could see how just let the position work, manage stops as we go forward. SPG was one we caught on this breakout. I don't remember if it was the 27th, 28th. I'd have to check the spreadsheet. But you could see we've pretty much moved higher since. This week had a couple of days of a pullback. But for right now, I'm very content with the 162 level as our stop. Travelers, I mean, beautiful looking chart, but again, not much in the way of intermediate support. So stop will stay down here at 91. And again, you could see that consolidation, the breakout we had, and the run it's had since. Again, entering that overbought condition. So just be wary of it if you're a shorter term trader or you're trading options or something like that. But for right now, I'm perfectly content with leaving it as is. The last one, CTAS, which for some reason is not on my list. And CTAS was the one that's pretty much given us the biggest loss so far that we've had. And you could see that breakout we entered and we've pulled back since. So 67, still a long ways away from 71. 50-day moving average and trendline support still providing the resistance. But you could see what's happened is we've entered that overbought area and it's since pulled back. So maybe a little bit more sideways action is necessary to work off those overbought conditions, or maybe a pullback and a bounce higher. But for right now, consolidation looks like the best case scenario here. If we can break out over 73.65, then we'll be able to probably use whatever low we make, whether it's 70 or a little bit lower, as our next trailing stop level. So as far as positions go, everything looks great. Like I said, we are going to change or modify stops in Kroger, Kroger, L brands, and Ross Stores. So we'll take some risk off the table in those. All right, and that'll update in the portfolio. So let's take a quick look at the new watch list for this week. Again, it's a small one, but we're pretty much at a good area in the portfolio, so I'm not really looking to add much in the way of positions. But if they present themselves, we'll take them. So let's take a quick look. All right, so the first one is Alcoa, and Alcoa was one I was long. I got stopped out, and right now it's pretty much almost testing those highs again. So I'm really looking for a breakout over 1722. The way I'm looking at it here is this small consolidation is as a potential higher low. All right, so you would have this low and then a higher low. So if we get that breakout over 1722, I think we could use that 1614 area as a good stop. You could see again it's worked off those overbought conditions on the weekly chart, came back and reverted right to the middle of the range. Abbott is another one that's pretty much testing its highs. Okay, so here's a small little consolidation that we have, but essentially looking for a break over $44. If we got that break, I don't know if we would necessarily go all the way to 39, but we may instead go to like 41.50 as the low from here, and that would give us a break of the 50-day moving average as well as these sets of previous lows as a good stop area. AMT, this one is really just consolidated. I think we were long this way back when. I think this was actually our breakout area from that back there. So you could see, we exited the position, it came back down, and then sure enough, now it's consolidating again. So if we can get that breakout over $100, potentially probably use, let's call it 90. All right, let's just go even 10%. 90.75, let's call it. All right, so again, nice looking setup there. Much longer term time frame. And just goes to show you that, I don't really watch stocks after we exit. I kind of let them come back to me. And, if they're set up, then I'll take them. If not, too bad, so sad. I missed them. Ball Corp, BLL. This was one we talked about last week. His potential setup. So you could see it had broken out, but we had earnings, so we didn't take it. Ended up earnings brought it right back into consolidation. So a break over 67.84, and then we may even use 63.23, if not 62, as our stop level. CenturyLink, CTL. Consolidation, bouncing off support, still waiting on that break over 41.30, but look at what's happened. All right, we've entered that overbought area, and actually since we've been watching this linear regression channel is slowly starting to shift from a downward position to now it looks fairly flat. So I would assume the longer that we stay here, and if we even potentially break out, that this channel would change and actually start reverting to the upside. Discover Financial. This was one that we probably could take this week, but I want to let it kind of see what happens next week. It was a marginal break, but again, it was up on a down day, so I like the way that looks. If we can get a breakout over today's high, say 66.03, then we could even use 60.43 or even come in here at 61.84, but that one also looks like a good position for next week. Kansas City Southern. This one we are waiting on some breaks over these tails. Sure enough, we didn't get that yet, but it looks like potentially this could prove to be a good looking position. Let's get that breakout over, say 125. We could set that stop right around 111. Give it a nice little bit of room to run, and then look to add later on. Lilly, LLY. Okay, you can see how it's consolidating within this box, so we need a break over 67.20, and that would be able to put our stop down here at 62. That was one we had on last week. A new one for this week, Norfolk Southern, NSC. You can see how that's tried to break out and failed. All right, so I don't know exactly where the box is. Maybe it's something like that. So again, if you can get that breakout, let's call it over 114 now, then I think we could be fairly aggressive and probably set our stop either here at 108, or I don't know if we're going to be able to get it all the way down here, but the other option is 102. Depends on where we get filled at, to make sure we're not exceeding that 10% rule that we have. Newell Rubbermaid and NWL. You could see this was consolidating, broke down, came right back, tested those highs. So a very sloppy pattern here. But essentially the biggest thing you have to worry about is a break over 33.36. If you can get that break over 33.36, then I think 33.30 will be the stop level. All right, so you could just see we're really just looking for new highs in Rubbermaid. Petsmart, PETM, again, similar situation, looking for new highs. All right, and I think if we were able to get those, probably use this 68 level. I don't know if we'd be able to get down to 64, but 68, 61, you could see I would be considering that another higher high, similar to I think what we had in Alcoa, and a breakout over 72.66 would give us that. RSG, one we got stopped out on. Now we're looking to get back in. Break over $40 would be that trigger, and a stop either 37.83 or 37.20 could be our stop level. And the last one, Weyerhaeuser, WY, I think that's how you say it. But anyway, breakout over 34, and then you can again either set your stop down here at 31.69, or if you're a little more aggressive, right around here at 33.06. But another nice looking setup, lends itself to the building materials. So for right now, just looking for that break over 34.50, and we're close to it. So we have about I would say 12 to 15 positions on for next week, or trades that we're watching for next week. Let's see what happens. But that's the beauty of being positioned well in the portfolios. You don't have to chase anything, let everything come to you, and that's a huge difference in the psychology of being a trader. Once you can realize that you don't control anything, and you're at the mercy of the markets, and you let the markets kind of work for you, and you just follow what the market's telling you, trading becomes a whole lot more enjoyable. All right, you're not panicking and trying to make something happen that's really not happening. You're letting the market dictate, letting the stock dictate, and that's exactly what we did today. We brought our stops higher, on 3 positions, and the watch list has identified about 12 to 15 positions that look good for next week. If we don't get any, we don't get any. The other thing I want to go over real quick before we forget is 3 trades that did trigger from last week's watch list. Again, I apologize for not getting those out to you, but WFC, we were looking for a breakout over 67.43. Sure enough, we got that, and it looks good. So if you were following along last week and you took these trades, good for you. What was this? Legg Mason, waiting on that break over 51.95. Sure enough, got that a couple days after earnings, and it's proceeded higher. And the last one, CME Group, had that breakout on 11.3. Sure enough, it's proceeded higher, and you can have that stop right down there at 77.89. So again, if you watched last week's watch list, I hope you guys got in those. If not, again, no big deal. It's 3 trades. It's not going to make or break your year. At least hopefully not. And we have 12 to 15 new trades to look at this week. So that's it for today, guys. Thanks for watching. Please follow me, StockTwits, Twitter, Google+. Subscribe to the YouTube channel, and subscribe to the Nightly Recap. Have a great rest of the weekend.